Capital gains tax. How much do you have to pay, and are there any ways of mitigating it? Check out this video as we go through all of the details. Hi everyone, my name is Simon Misiewicz from Optimize Accountants. I'm here to help you grow your wealth whilst reducing your tax liability. And in this session, we are going to be talking about capital gains tax. What is it? How much have you got to pay? Well, let's talk about that. What is chargeable to capital gains tax? Now, capital gains tax is when you sell an asset and you've made a profit. But what do you pay CGT on? Well, you will pay assets on anything that you sell to a third party. You might have to sell an asset to a family member. You still have to pay capital gains tax. There is no escape. You might gift a property to a family member. So even though you've not sold it, you still are subject to capital gains tax. Wow, that's a bit harsh. But you also may have an exchange of an asset which is non-trade. So if you have a car and you want to trade that for something else, like a painting, then you are technically selling your asset and maybe you have to pay capital gains tax on that as well. Now, there are elements that you don't have to pay capital gains tax, and let's go through that as well. So these assets below £6,000, and those are de minimis amounts really for CGT purposes. So if you have a painting and you happen to sell it for £5,000, you wouldn't have to pay capital gains tax on that particular asset, which is great news really. You don't have to pay capital gains tax on selling your home, provided that you've stayed in your home for the majority of the time. There are some exceptions to that, where you can leave your home and then move back in and still not have to pay capital gains tax on that property. You could have ISA shares. So ISA shares may grow in value. You take the gain, but you would not be subject to capital gains tax at all. There are some other assets that is not subject to capital gains tax if you sell it for a profit. The first one is inherited property and assets. So if someone passes away, they gift you an asset, you would not pay tax, capital gains tax, on the acquisition of those assets. What you would pay capital gains tax on is the increase of value from when you inherited it. So it's not a total avoidance, even though HMRC legislation might lead you to thinking that, but it's the initial value you get it, you're not subject to CGT on that. But if you later then sell it, you could be paying that capital gains tax liability. Gifts from husband and wife, civil partners, those are free from CGT. So sometimes we always say, well, utilize your annual CGT allowances. I'll put my teeth in a second. And using that really does benefit you from paying CGT at a much lower rate if done properly. We'll go through an example of that later on. And if you gift money to charity, then you don't have to pay capital gains tax either on that. Let's talk about the rates. You could make a gift to a spouse, a gift to your children, your loved ones, and if that gain is less than £12,300, then you would not be subject to capital gains tax because it's lower than your CGT annual allowance. So it basically means you can make a gain of £12,300 and not be subject to CGT, which is great. Now, the problem is with that is most people will sell assets and make a gain that's greater than the CGT annual allowance. How much do they pay? Well, as a basic rate taxpayer, you can pay 10% CGT or 18%. Now, please note, that's not an option. That's just the fact that if you are selling most types of assets, you as a basic rate taxpayer would pay 10%. But if you're selling buy-to-let property investments, then you would be subject to 18% CGT rate instead. Higher rate taxpayers, well, you pay 20% on the majority of assets. Again, please note, if you're selling a buy-to-let property investment, you will pay 28% capital gains tax instead. Now, on that side of things, couples do benefit from a CGT annual allowance of £24,600. So it's really important that you utilise both allowances when you're looking to sell assets. As we described here, you may have a particular person that's got 12,300, and we could look to phase when you sell your assets, which basically means that you are looking to dispose of assets over a period of time to utilize your annual CGT allowances. And if you are married civil partners, then you've got double the amount. So it can help you to phase and strategize your disposals and not pay capital gains tax at all. So let's just go through an example here whereby we've got Christy. Now Christy is a high rate taxpayer, which means on an income tax perspective she pays 40%. Now from a capital gains tax liability, as we mentioned on the previous slide, she will pay either 20% or 28%. We're going to assume here that she's got a buy-to-let property and she's made a £30,000 gain. Now, Christy does benefit from the 12,300 CGT annual allowance, which gives her now a taxable benefit of 17,700. 17,700 is subject to 28% in this regard, which is 4,956. However, as we've described earlier, we can make transfers between husband, wife, civil partners. So why wouldn't we do that? Well, we would, of course. So what we're looking to do here is make a transfer between spouses and utilize the CGT annual allowances. Now, in this regard, we might have John, who's a basic rate taxpayer. And what is going to happen here, we could simply say, well, let's give from Christy the full amount to John as a basic rate taxpayer, which is fine, because automatically he will now have a £30,000 taxable gain when all said and done. He's got an annual CGT allowance of £12,300 and then a taxable gain of £17,700, which basically will be taxed at 18%, which is now £3,186, which is a saving from the 4,956 we described earlier. That's quite good tax planning, but we can go further. Automatically, we could utilize both annual CGT allowances for both Christy and for John as well. So that's what we've done. We've taken the £30,000 worth of gain and we've utilized the 24,600 annual CGT allowances for both parties here, which now gives a taxable gain, but we've apportioned the amount of asset more to John than to Christy, and therefore he is going to be taxed on the excess of 18%, which is £972. Now, as I described earlier, it is important for us to understand how we can minimize CGT. And we can do that if we do a phased approach. So you might have an asset value with a asset value of £200,000, which you've disposed of in year one. You've got an asset cost of £190,000, giving you a gain of £10,000. Now, if you had two assets that you sell those in the same year, you've now got a gain of £20,000, which, let's be fair, is in excess of £12,300, and you will pay CGT. But if you manage to phase that over a 2-year period, across 2 tax years I'm talking about here, then you would be able to benefit from your CGT allowances. Now, it is possible to sell an asset on the 5th of April, which is in 1 tax year, and sell another asset on the 6th of April. It's really technically 1 calendar day later, but it has a huge difference in terms of tax by the fiscal period. So make sure you speak to your accountant and tax advisor of when you sell your assets. Now, if you're going to sell some assets, you might choose to sell some assets that's not making you a gain. So if you've got assets that have got a loss, or indeed you can bring forward some of those CGT losses, then it can offset any gain you have. So in this regard, we've got 2 assets here. One of them is making a £20,000 gain. One of them will make a loss of £10,000. Net those 2 together, and now you only have an asset that's going to give you a taxable gain of £10,000. But that's less now than your annual CGT allowance of £12,300. Guess what? There's no capital gains tax liability on that. Now, if you're interested to know more about CGT, then go on to our community, which will help you to understand how you can reduce CGT further. There is a 7-day free period, and I'm going to drop you a link just below here. And I'm going to also give you a link of how to calculate capital gains tax on your buy-to-let property investments and ways in which you can reduce it too. So there's a link below this video, and if you've liked this video, find it useful, give us a like. It really does help our YouTube algorithm. If you've got a question, drop that into, and I will make sure I answer that as soon as I can, and make sure you subscribe to this channel. If you want to discuss our services, then there's a link to that as well. Or indeed, if you want to book a 60-minute tax consultation with me, Simon Misiewicz from Optimize Accountants, you can do that too. Make sure that you use the code YouTube25 to get a 25% discount. Until the next video, my name is Simon Misiewicz. I'll see you again soon.